Hey guys, welcome to the first episode of the WG podcast. My name is Ian Tai, and today we're going to talk about nominating our parents as our beneficiaries of our life insurance policies. Now, in this podcast, there are two things I would like you to take note of. The first one is this: it is known as the Financial Services Act or the FSA 2013, and this will relate to all of your life insurance policies that you have purchased after the year of 2013. And the second one is this: what exactly is the marital status at the time that you have purchased your life insurance policy? Now, these two things here are very crucial as they will impact how your parents could use the insurance money after you have passed on in the future. So let me just give you two quick examples. Example number one: let's say at the time that you buy your policy, you are still single and you have nominated your parents to be beneficiaries of your life insurance policies. So what happens if you have passed on? Well, if you have passed on, the insurance company will pay out the sum assured to your parents, and your parents can use the money freely as rightful beneficiaries. So basically, it's that simple. So that is actually example number one. And now let's look at example number two. So let's say at that time, you have actually purchased your policy after you have become married, and you have nominated your parents to be beneficiaries of your life insurance policies. So what happens if you have passed on? Well, if you have passed on, the insurance company will still pay out the sum assured to your parents, but your parents will not receive them as rightful beneficiaries, which is recognized by the law, but instead, they will be executors of the sum assured, which means they cannot use the money freely as we have discussed in example number one, but rather they have to manage and distribute the monies given to them by the insurance company to the rightful beneficiaries, which is recognized by the law, who is none other than your spouse and your children. So as you can see, the marital status at the time when you buy the policy will definitely have an impact as to how the monies can be used by your parents after receiving them from the insurance company. So now maybe you're asking me this question: what if today I'm married and I want to add to my parents' retirement and medical funds with a life insurance policy? Now, that's a very good question. And let's say, for example, you intend to prepare for your parents, number one, an additional living expenses of 5,000 ringgit a month, and number two, to pay for any medical bills if any arises. And you intend to buy yourself a life insurance policy of 1 million ringgit in sum assured. So, how do you go about it? Well, the best way to go about it is to establish yourself an insurance trust. Now, here I'm going to explain to you how it works. And basically, it involves three simple steps. And the first one is this. Number one, you can actually purchase yourself a life insurance policy where the sum assured is 1 million ringgit. And step number two, instead of nominating your parents as the beneficiaries, you can assign the insurance policy to your own insurance trust. And this brings us to step number three. And when you establish your insurance trust, you need to set up instructions in your trust deed as to how the money will be spent and be distributed after the money, the 1 million ringgit, is received from the insurance company. Now, let's say, for example, you can actually nominate your parents as the primary beneficiaries of the insurance trust. And over here, you can state that the trustee, upon receiving the $1 million from the life insurance company, they will pay out 5,000 ringgit a month in living expenses to your parents. And if, let's say, any of your parents are hospitalized or they require medical attention, then of course, the trustee can actually put in the medical bill for your parents. And number three, if let's say both of your parents have passed on, then any balance within the insurance trust, right, you can actually distribute them to your secondary beneficiaries. And they could be your spouse, your children, your brothers and your sisters, and whoever you want to elect. And finally, over here, I would like to actually summarize the benefits of having an insurance trust over a simple insurance nomination. So let's say, for example, if you want to elect your parents as the beneficiaries of your sum assured of your life insurance policy, then the best way to go about it is to have an insurance trust over an insurance nomination. This is because if you use an insurance nomination, your parents may not be the rightful beneficiaries, but just mere executors of the sum assured. Number two, the purpose. If you want to decide how the money should be spent and distributed, then of course you need to have an insurance trust. This is because if you use an insurance nomination, you cannot control how the money is being spent after it has been dispersed to your beneficiaries. And number three, frequency of payment. So if you use insurance nomination, it's just one lump sum, which means 1 million ringgit, one lump sum paid to beneficiaries. But if you want to have a choice as to how And when the money is to be distributed, then you can actually use an insurance trust to help you fulfill your objectives. And finally, beneficiaries. If you want to elect secondary beneficiaries, then of course you will need an insurance trust, because insurance nomination, in the nomination form, there's no place for you to put in who you want to elect as your secondary beneficiaries. But with an insurance trust, you can do so. So over here at WG Legacy, we are now offering free reviews on your life insurance policies, will and trust policies. So if you want to have a free review on your policies, you may reach us with the following methods. You can WhatsApp us at 019-729-4278, or you can email at jocelynchi.office@gmail.com. You can reach us through our website, which is wglegacy.com. All right. So with that, I would like to thank you for watching this podcast, and stay tuned for our next one, and hope to see you soon. Goodbye.